Richard Wyckoff, observing the markets a century ago, understood that price action alone was insufficient to determine the intentions of the professional traders he called the composite operator. His fundamental tool was the ticker tape, a stream of executed trades that revealed the immediate balance of supply and demand. Today, the ticker tape is gone, but its modern equivalent provides an even clearer digitized window into institutional activity. This video bridges the gap between Wyckoff's 1910s methodology and the modern trading screen, showing exactly how to apply his principles to level 2 and time and sales data. We are no longer reading paper prints, but we are reading the same core information: who is trading, how aggressively, and what the immediate result is. Wyckoff's methods were built on the necessity of reading transaction data before charting became common, making them profoundly relevant for identifying real-time shifts in supply and demand. The core thesis remains identifying the actions of the composite operator by tracking volume, velocity, and effort versus result directly on the order flow. Before we dive deep into decoding the screen, please take a moment to subscribe and leave a quick comment below, even just a single word or a question about Wyckoff. This simple action of engaging with the content greatly helps the algorithm recommend this video to more people and shows me that this kind of practical, historical content truly matters and is worth creating. Furthermore, I urge you to return to the channel during challenging times when trading becomes difficult and your confidence starts to waver, because consistency and education are the only true long-term edges. Now let us return to the foundation of Wyckoff's vision and the modern tools that replicate the tape. The modern tools that replicate the old ticker tape are the time and sales window and the level 2 depth of market display. Time and sales, often called the tape, is a chronological list of every executed trade showing the price, size, and time of the transaction. This window reveals the aggression, or lack thereof, of market participants, providing the velocity Wyckoff emphasized level 2, or the depth of market, shows the passive side, the pending limit orders waiting to be filled at various price levels. Combining these two tools allows the modern Wyckoff trader to see both the aggressive market orders hitting the tape and the passive limit orders absorbing or facilitating those trades. This combination is crucial because it allows us to track the institutional footprints that Wyckoff sought to identify. Understanding how to read level 2 and time and sales is perhaps the most direct way to observe the composite operator's activity in real time rather than waiting for confirmation on a delayed price chart. Wyckoff's first law, the law of supply and demand, is perfectly illustrated by modern order flow tools. The tape, time and sales, reveals the raw aggression of market orders, the actual demand or supply being executed at the current price. If supply overwhelms demand, the price will fall, and this imbalance is immediately visible in the speed and color of the time and sales prints. Conversely, level 2 reveals the passive absorption, showing us where the limit orders are stacked up, waiting to either stop the move or facilitate it. If we see aggressive selling prints flash rapidly on the time and sales window, but the level 2 bid stack remains deep and the price refuses to drop, we are witnessing institutional absorption. This is a clear demonstration of Wyckoff's principle in action. Strong demand is passively meeting and consuming aggressive supply. The ability to distinguish between aggressive market action and passive limit order absorption is the foundational skill of modern tape reading. This real-time visibility provides a significant advantage over relying solely on candlestick patterns or traditional volume indicators. Wyckoff's second law, the law of effort versus result, is the key link between the order flow tools and the subsequent price chart. Effort is defined by the heavy transaction volume seen on the time and sales window, the sheer number and size of contracts traded over a short period. The result is the subsequent price change shown on the chart, or the lack thereof. If we observe massive effort, heavy prints on the tape that results in minimal price change, poor result on the chart, Wyckoff knew this indicated absorption or distribution by the composite operator. For example, if a stock trades 50,000 shares in 1 minute, all hitting the offer aggressively, but the price only moves up 2 cents, that effort failed to produce a proportional result. This scenario immediately signals that a large institutional seller is supplying the market passively, distributing into the aggressive retail or short-term demand. The composite operator is using the liquidity provided by the aggressive buyers to unload their position without causing a sharp price drop, which is exactly the manipulative action Wyckoff trained his students to recognize. Wyckoff also placed extreme emphasis on the importance of velocity, or the speed of the prints. Velocity is not just about the total volume at the end of a minute. It is about the pace at which transactions are occurring in real time. Modern traders monitor the rapid fire of executions in time and sales to identify climaxes and turning points, knowing that sudden deceleration often follows acceleration. A sudden spike in velocity often accompanies a selling climax or a buying climax, indicating a final exhaustive push by one side of the market. When the time and sales window goes from a steady trickle of trades to a blur of rapid-fire prints, we know a significant event is underway, often signaling emotional capitulation. Once that climax passes and the velocity dramatically slows down, it signals exhaustion of the aggressive side, often preceding a reversal. Wyckoff taught that the market rarely turns on a dime without this velocity spike, followed by subsequent quietness, providing a tangible metric for anticipating shifts. The first step in decoding the time and sales is filtering the footprints to identify the institutional activity. Retail traders typically deal in small sizes, perhaps 100 to 500 shares, which constitute the market noise. Wyckoff would have focused only on the large institutional block trades, the large prints that represent the primary evidence of professional activity. Modern tape readers must set filters on their time and sales display to highlight or isolate trades exceeding a certain size threshold, perhaps 1,000 or 5,000 shares, depending on the asset's typical liquidity. These large prints, often executed as market orders, show where the serious money is entering or exiting the market with conviction and aggression. If these large prints are consistently hitting the bid, it signals aggressive supply pressure from the composite operator or other large funds. Conversely, if the large prints consistently lift the offer, it confirms aggressive, immediate demand that is consuming available supply. Filtering out the small noise allows the trader to focus solely on the actions that truly move the price and reveal institutional intent. Recognizing the selling climax or buying climax through the tape is one of the most powerful applications of Wyckoff's velocity principles. A selling climax is characterized by monitoring a sudden massive surge in transaction speed and size, the velocity spike. This surge must consist of prints aggressively hitting the bid, often driving the price lower rapidly. The key confirmation is what happens immediately afterward, an immediate and dramatic slowdown in the rate of transactions, indicating the final sellers have been flushed out and the supply has momentarily dried up. The buying climax follows the inverse pattern, where rapid, large prints aggressively lift the offer, driving the price up quickly in a final exhaustive push. The institutional trader looks for the subsequent quietness on the tape, where the velocity slows down dramatically, signaling that the aggressive buyers have expended their ammunition. This sudden shift from high velocity to low velocity following a price extreme is Wyckoff's confirmation that the market is ready for a reversal, having completed its shakeout or final push. We must also look for confirmation of strength or weakness through sustained velocity. True accumulation or distribution is rarely a single transaction. It is a sustained campaign by the composite operator. During accumulation, we look for sustained, high-velocity prints consistently trading at the offer, indicating aggressive demand is consuming the supply available at the best price. This sustained aggression, where buyers repeatedly pay the asking price, confirms that demand is strong and persistent. Conversely, confirmation of weakness involves sustained high-velocity prints consistently trading at the bid, signaling aggressive supply is dumping shares into the market. This persistent selling pressure, where sellers repeatedly accept the lower bid price, confirms that large players are aggressively distributing their holdings. The sustained nature of this velocity, rather than a single spike, differentiates genuine underlying strength or weakness from a mere shakeout or temporary price excursion. Wyckoff also spoke about tape thinning, the observation of the tape slowing down significantly after a major move or a period of high activity. Modern analysis shows the time and sales stream drying up, signaling a potential lack of interest or exhaustion before a reversal. If a stock has rallied sharply, and then the time and sales prints drop from 5 transactions per second to 1 transaction every few seconds, it indicates the buying interest has evaporated. This lack of participation suggests the move is exhausted. This thinning is often the quiet signal that precedes a secondary test or a low-volume consolidation, confirming that the aggressive side has temporarily stepped away. When the tape thins out at a high price, it confirms that supply is no longer being met by fresh demand, setting the stage for a potential decline. Wyckoff taught that a quiet tape, particularly after a volatile move, often speaks volumes about the market's underlying exhaustion. The history of Wyckoff's methods is inextricably linked to the colorful, high-stakes history of Wall Street itself, a history often driven by the very manipulations he sought to expose. If you find the study of these timeless trading principles fascinating, you might also be interested in exploring the context that created them. Before we delve into the passive side of the market, Level 2, I want to briefly recommend a resource dedicated to these historical narratives. The Wall Street Memoirs channel offers deep dives into historical events, financial crises, and the lives of the legendary figures who shaped the market, providing the crucial background understanding of the environments Wyckoff and his contemporaries traded in. Understanding the history of financial crises and the mechanisms of past manipulations gives contemporary Wyckoff traders a vital perspective on current market psychology and institutional behavior. If you want to connect the dots between historical market events and the timeless patterns we see today, subscribing to the Wall Street Memoirs channel is an excellent next step. You can find the link to the channel conveniently placed in the description below. Level 2 is the modern equivalent of understanding the brokerage house order books that Wyckoff would have observed, revealing the passive side of the market. The depth of market display shows the limit orders waiting on both the bid-side demand and the offer-side supply at various price levels. Wyckoff sought to understand the intent of the large traders, and Level 2 provides a direct view into where institutional money is passively waiting to enter or exit. The size and placement of these waiting orders reveal immediate support and resistance levels established by major players. A key focus for the Wyckoff trader on Level 2 is identifying absorption, which is the process of passive demand consuming aggressive supply. This occurs when large limit orders, often referred to as iceberg orders or large blocks, appear on the bid during a decline. These orders act as a massive sponge, absorbing huge amounts of selling pressure that are visibly seen as rapid, large prints in the time and sales window. The defining characteristic is that the price refuses to drop significantly, despite the heavy selling volume hitting the bid. The Level 2 display shows the bid side constantly refreshing or reloading with large orders right at the current trading price, preventing further downward movement. This passive absorption is the Composite Operator accumulating shares without driving the price up, which is a classic Wyckoff maneuver during the accumulation phase. When you see strong selling velocity on the tape met by persistent, deep bids on Level 2 that do not allow the price to break, you are witnessing the institutional footprint of accumulation. This absorption confirms that the supply is being met by professional demand, signaling underlying strength. Level 2 is also essential for confirmation during the automatic rally and secondary test phases of accumulation. After a sharp selling climax, the automatic rally occurs as aggressive shorts cover and fresh demand enters, driving the price up quickly. Level 2 confirms this support when the bids stack up quickly and deeply right below the automatic rally low, showing institutional support has stepped in with firm limit orders. This rapid establishment of a deep bid structure confirms that the Composite Operator has established a temporary floor. During the subsequent secondary test, the market retests the low of the selling climax, often on reduced volume. For the test to be valid, Level 2 must show significantly less selling pressure, meaning the offers are thin, than during the initial selling climax, confirming supply is exhausted. If the price returns to the test low and the bids are shallow but the offers are also shallow, and the time and sales prints are small and slow, it confirms that the Composite Operator is confident the supply has been cleared. A failed test, conversely, would see the offers stacking up heavily again, signaling renewed distribution pressure. Modern Level 2 analysis requires reading the manipulation, particularly in high-frequency trading environments, which aligns perfectly with Wyckoff's understanding of engineered market movements. High-frequency traders often engage in tactics like spoofing, which involves placing and rapidly canceling large limit orders on Level 2 to induce retail traders to enter or exit positions. A large order placed deep on the bid might encourage buyers to enter, believing there is strong support, only for the order to be canceled milliseconds later. The Wyckoff trader must distinguish between genuine intent and manipulative displays by cross-referencing Level 2 with time and sales velocity. If a large block appears on Level 2 but is never executed or is quickly cancelled when the price approaches, it is likely spoofing designed to push the market in the opposite direction. Genuine institutional intent is confirmed when those large Level 2 orders remain in place and are actually consumed by the time and sales prints, confirming true absorption or supply. The real power of modern Wyckoff analysis comes from synthesizing the aggressive prints on time and sales with the passive depth of Level 2, particularly when confirming key structural points like the spring. The spring confirmation occurs when the price sweeps below a prior low, seemingly breaking support, in an attempt to shake out weak holders. The tape must confirm that this shakeout failed to attract sustained selling pressure. When the spring occurs, time and sales will show a rapid spike of selling, large prints aggressively hitting the bid, confirming the shakeout is underway. Crucially, Level 2 must show the bids immediately reloading or firming up right at the low, absorbing the selling pressure. Furthermore, the selling velocity on the tape must quickly die off immediately after the low is hit, confirming that the supply has been cleared and the price is quickly accepted back above the former support level, validating the spring as a successful institutional maneuver. The upthrust confirmation is the opposite maneuver, occurring during the distribution phase when the price moves above a prior high to trap aggressive buyers. When the upthrust happens, time and sales will show large prints lifting the offer, suggesting aggressive demand is driving the breakout. However, the move stalls quickly, and Level 2 provides the critical warning sign. Level 2 reveals heavy selling pressure, large offers, immediately appearing and holding above the high. This persistent large supply on the offer side signals institutional distribution into the rally, as the composite operator uses the liquidity of the trapped buyers to unload their shares at higher prices. The combination of high velocity on the tape that fails to sustain the price gain, coupled with the immediate appearance of massive, persistent resistance on Level 2, confirms the upthrust as a classic distribution tactic. The inability of the aggressive buyers to consume the newly added supply is the clear sign of weakness. Finally, using tape reading for the sign of strength confirms genuine breakouts versus false moves. A true sign of strength must be accompanied by sustained high velocity on the time and sales window, showing continuous aggressive demand consuming all available supply. This velocity must be supported by Level 2 showing limit orders being consumed rapidly, without new large selling interest immediately appearing on the offer side. The depth of the market must thin out on the offer as the price rises. If a breakout occurs with high volume on the chart, but the time and sales velocity is patchy, or Level 2 shows persistent large offers appearing just above the price, the sign of strength is questionable. A genuine sign of strength is characterized by the market efficiently moving higher because aggressive buyers are overwhelming the passive supply, confirmed by the real-time consumption of Level 2 offers and sustained high transaction velocity on the tape. Wyckoff's methodology demands that the volume and flow must confirm the price action, which is precisely what Level 2 and time and sales allow us to do. The journey from the mechanical ticker tape to the digital order flow screen underscores a fundamental truth. Wyckoff's method is not about the tool itself, but the timeless principle of judging the true balance of supply and demand based on transaction flow and order depth. Whether you are watching ink prints scroll across paper or flashing numbers on a monitor, the goal remains the same: tracking the intent and action of the composite operator. The principles of effort versus result, velocity, and absorption are universal laws of market dynamics. The modern edge gained by combining traditional charting with the real-time data from Level 2 and time and sales is crucial in today's high-speed environment. Charts tell you what happened. Order flow tells you what is happening and provides predictive insight into the market's immediate next move. By mastering the interpretation of these modern tools through the lens of Wyckoff, traders can identify institutional footprints, anticipate climaxes, and confirm structural shifts with higher confidence. This synthesis provides a crucial real-time edge in predicting the intentions and manipulations of the composite operator. If this deep dive into Wyckoff's methodology and its modern application has resonated with you, I highly recommend expanding your foundational library. Richard Wyckoff's classic work, How I Trade and Invest in Stocks and Bonds, remains an essential text for understanding market structure and the actions of large players. We have created an adapted edition of this seminal work that reveals his time-tested methods for analyzing the market, determining the intentions of major players, and making informed trading decisions, translating his sometimes archaic language into clear, practical guidance for the contemporary trader. This book is the perfect complement to this video, providing the theoretical rigor necessary to master these practical techniques. You can find the link to the adapted edition in the description below, allowing you to secure your copy today and further solidify your understanding of market mechanics. Thank you for joining this exploration of Wyckoff's enduring secrets. Keep practicing the integration of Level 2 and time and sales with your chart analysis, and you will begin to see the market not as a random walk but as a carefully orchestrated campaign.